Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing well. Hope everybody is getting a nice start to their weekends. Temperatures are starting to rise. Good things are happening. We're alive. We're healthy. Everything else is a cherry on top. If you are enjoying the content and you've been following along for a long time, all I ask is, guys, be so kind and click a like, right? Click a like on the video, share, subscribe if you haven't come aboard already. I think you guys have figured out by now, or at least you should be, kind of where you want your career to go. You got to ask yourself a question. Do you want to be, because again, the word trading, I think is really run its course. A buddy of mine put it perfectly couple of days ago. He said in a bull market it's trading for most people. In a bear market it's holding. So he's not wrong, right? He's absolutely not wrong. But at some point, especially in the beginning of your career, you have to figure out, do I want to be a person who just buys stocks in the bull market, or do I want to be a trader, right? It's a very, very big distinction of the two. And I think the last 5 weeks, you guys really have seen it. If you've been following a long time, again, you've been seeing, and we've been demonstrating the power of the pivot, both sides of the market for absolutely years. There's a link below. If you are interested in pivots, all it takes is 30 days to figure it out. First, I tried to remove everything you've learned in your first 2-3 years. Okay, we completely break you down, absolutely break you down from everything you think you know. And then we start building you up slowly but surely. And we start putting all these weird lines in front of your face, right? Which a lot of new traders go, "What are so many lines in front of your face?" Well, we'll get to that. We'll get to that another time. But it's very, very important to kind of figure out what identity you want to take as a participant in the market. Because again, yeah, it's all funs and giggles, right? Days at the beach when the market is going gangbusters and euphoria. Everybody's a superhero. And once you hit into a sell cycle, or in the case of 2022, and full-blown bear market, you realize that the superheroes that you are revering during a bull market and they're wearing a cape, that cape is not a cape. It's a tablecloth. So you have to really, really decide what you want to be identified as a trader, right? Or trader or a holder, as my friend would say in a sell cycle environment. So let's talk about it, right? Let's talk about it. Why was this week different than the previous week? Number one, the buyers finally stopped the bleeding. If you look at the scoreboard, the S&P broke a 5-week losing streak. Up only 0.5% for the week, but it's a victory. The Dow added 1.2%, primarily because of Boeing. We'll get to that in a second. And the NASDAQ finally stopped the bleeding as well, only up 0.2%, but the buyers will take it. So what made this week different, right? Number one, and we've been talking about this for several videos, the headlines kind of stopped, or the headlines were at times where you're pretty much done for the day, 2:30, 3 o'clock, 3:30. You don't care about those headlines. They're not going to affect your day. Trump wasn't going crazy with the Twitter fingers. Every single time they burped, or had a meal, it had to be on Twitter. So the tweets came to a slower point. You had the headlines kind of get muted, and the tariff talk was just kind of like white noise in the background. And everybody knows, again, yes, we have the April 2nd tariffs. They're about to hit. We get all that. But what I saw from the bulls this week was they stopped going down on the same news, the same headlines throughout the week that we saw the previous week. Now, if you look at the market, right, if you are kind of a novice investor or a novice trader and you look at the tape and you say, "Oh, this is an ugly ass chart," and you're absolutely right, right? If you look at the QQQs, we're an ugly ass chart. We're below the 10-day moving average. Forget about the 200. Forget about the 50. We're just talking about short-term baby steps, right? We're below the 10-day moving average. We're trying to hold on to the 5 on the close. So why is there any type of optimism going into next week? Well, this is kind of what we talk about. This is kind of where we put on our experience hats and we try to decipher things. Okay. Number one, do you guys remember like 3 weeks ago? You guys remember 3 weeks ago, right around here? You guys remember right around here, this Microsoft chart I was talking about before it exploded? I kept on saying, this is a crappy chart. It's horrible. It's horrible. It's horrible. But what I like about it is, or at least when I was recording that video, I like the fact that it's putting in green candles on the close, which basically means, well, two things. It looks like sellers, at least for this interval, are getting tired, and the closes are higher than the closes are higher than the opens. And ultimately, what happened? Microsoft got above the 5-day, got above the 10-day, and gave a really, really good 2-day move. Obviously, it sold off and got killed later. But that's kind of what I was looking at, right? I was looking at bottoming. I don't want to use that word. I was looking at seller exhaustion type of scenarios in Microsoft. And when you are trading on the bottom side of the market, you have to be conscious of a market's kind of spiking at any point. Again, market just doesn't go straight down. So we had this big, big move after 4 or 5 days of consolidation, closing higher than the open. So let's fast forward to where we are right now on the Qs, right? If you look on the NASDAQ 100, the last 1, 2, 3, 4, 5, 6, right? The last 5 out of 6 days have closed green versus red. Again, higher close than open. Is it a scenario that this is definitely the bottom? If you've been watching my video more than once, you know, who cares, right? Who cares? Okay, we're not trying to pick out and figure out prices for a month from now, 3 months from now. We're trying to win our next day's interval, long, short, or indifferent next day's interval. So what you're seeing here is 5 out of 6 days of green candles worth of red. Does that mean we're automatically going to rally next week? It doesn't mean anything. We talk about data, right? That's the most important part of the PS60 theory. We collect data for the next day. However, it's at least on the surface. You have to trust something, right? So at least on the surface, it's at least telling you there is at least a little bit of data that the buyers are at least putting up a fight, at least stop the bleeding. Here is what needs to happen, folks. This is what needs to happen going into next week. If the bulls want to continue any type of strength, again, believe me, we're not going to talk about risk on until we reclaim back the 200-day moving average. But if the bulls want to accomplish any type of strength going in for this week, they have to get above 486 on the Qs. Okay, there is no room for interpretation. This was the same number last week. Remember that? Last week we were talking about 486, 486, 486. The market will never go higher unless we get above that 486. Okay, I don't care how much of a nice person you are, your stocks will not go higher if the NASDAQ doesn't reclaim, the QQQs don't reclaim the 486. So we have to get above 486, right? If we can get a close above 486, then yes, I think there will be a pretty aggressive move in back to the 200-day supply. What happens after the 200-day supply? Will they get rejected? Will they reclaim it? We don't know yet. Again, we're trying to not put the cart in front of the horse. We're literally trying to win the next day's interval. Okay, so Monday, and this is not a significant level, but yes, the Qs need to get back above 481.86 on the close. That will reclaim the 10-day moving average. And then the next major step, you have to get above 486. You don't get above 486, we got nothing. We got bupkis. We got a nothing burger. So 486 will spark the market, and it will get it back to the 200-day moving average, roughly 492. On the downside, right, these are very, very clear levels. You could see it. The downside held 3 times in the same level. I'm even going to give you the level, right? I'm even going to give you the level. 472 is the bottom channel, right? 472 is the bottom channel. You can see here, we're stuck in this 7-day, kind of a 6-day rotation, right? So we can change. So you have 486 to the upside, 472 to the downside. That's all you need to know, right? That's all you need to know of who's going to handle the next several trading days and who's going to be in charge. Without this information, you're flying blind. Without understanding why these silly lines are important, you're flying blind. It's like getting into a car and pressing on the gas and you don't know where the hell you are. Maybe you're on the Autobahn, maybe you're in your garage. You don't know, but it's super duper important to understand where your supply and your demand is. Again, there are no fictional characters pulling the strings of the market. Okay, stop listening to 12-year-olds on social media. Buyers clean up sellers, the market will go higher. Sellers clean up buyers, the market will go lower. That's it. That's how the market works. That is how the functionality of the market works. That's called organic order flow. So 486 to the upside, 472 to the downside. Let's talk about individual equities, right? The last 2 days of the week, Thursday and Friday, were the first time I was long. I didn't put on any short trades on Thursday, and I didn't put on trades on Friday. This is the first time in 5 weeks I didn't do that because I started seeing the market react very, very tone deaf to negative news, right? Stocks stopped going down on the same news that we saw several weeks ago. Guys, if we can get above 486, there are massive opportunities, okay? Massive opportunities. The biggest moves always come on bottom channels, bottom intervals, reconfirming, for the exception of obviously reclaiming the 50-day or the 200-day moving average. I'm going to give you guys some really, really good ideas here, okay? Really, really good ideas. And these are stocks that I trade all the time. If you've been watching with me, if you've been in the webinar with me, the PS60 theory, these are my favorite stocks, okay? Look at Tesla. First of all, Tesla gave us a phenomenal pivot on Friday. More important than the phenomenal pivot on Friday, it gave us 2 bounce areas from the bottom of the range that were north of $5 each. Okay, we'll get to the pivots in a second. Here's Tesla, right? And somebody can make an argument, well, Tesla didn't even improve on last week's, and I think it was Ryan who said that in the webinar, and that's a great, great job by you, Ryan. Tesla didn't even advance from the prior week's price action. But what it did, right? It reclaimed back the 10-day moving average on the close, right? Everybody see that? With an expanding volume bar. That's a good thing. Folks, I am telling you, the day is long. Okay, we were talking about this last week. If we could confirm the range from March the 10th, this thing's going to 260, 262. That's a very big if, remember. It had an opportunity to do that 3 times in the last 2 weeks, and couldn't have done it. But again, we are prepared. That's the whole point of being a trader. We are prepared. Just the same way I'm prepared if it loses the bottom channel here of 222. I'm damn prepared if it starts getting above the upper channel here over this whole 10-day range. It's a very, very important level. Microsoft, right? Look at Microsoft. Again, the same thing. It's mirroring the Qs, right? Look at this. 1, 2, 3, 4, 5, 6 days. The last 5 out of 6 days have put in green closes. Again, higher closes than the opens. It stopped right at the 20-day supply. Look at the expansion volume bar. If Microsoft could get back above the 317 range, this thing has $7, $8 before the next supply. That's a really, really good looking chart. PLTR, you guys remember PLTR? We talked about this on Wednesday's video. If it could reclaim back the 50-day moving average, where it did reclaim back the 50-day moving average, got above the 88 level, got above the 88, 82 confirmation 317 channel, and closed at 991. Watch this range, folks. There's only one candle left, right? There's only one candle left in this range. If PLTR gets above this channel, man, this thing's going to really, really expand. So there's a lot of names that look really, really good, right? There's a lot of names really, really good. But guess what? The Qs have to start reclaiming levels. If they don't start reclaiming these levels, everything we talked about goes to nothing. It's a moot point. It's just a conversational piece. If my aunt had, should be my uncle, right? But again, you have to be prepared for it. So when you're going into this week, you already know we have to reclaim back Friday's channel, step 1. And we absolutely have to get above 486. If we do, things are going to light up like a Christmas tree. Now, is everything looking good? Nope. Not everything. NVIDIA didn't rally at all, right? Didn't rally at all. Again, it could wake up at any point, right? It could wake up at any point. Again, I'm very, very conscious about the channels here that needs to reclaim, but I don't like the fact that it didn't rally. We had a pretty big 2-day rally, and NVIDIA is just hanging on to the 10-day moving average. It tested twice, right? Not a great look if you're an NVIDIA shareholder. Okay. If you look, for example, like Google, put up a fight, I guess. again, does it look really, really great? Amazon that I traded on on Thursday, gave us a really nice trade, right? Reclaim the 5, reclaim the 10. Needs to put up some work, right? Needs to do a little bit of work. Is it really exploding? Amazon only up $1 after a monster rally. So there's going to be trailers, right? There's going to be names that are lagging that, you turn around and go, it's not really participating. Yeah, of course, Amazon could wake up at any point. Of course, NVIDIA could wake up at any point. But stick to the names that have very, very clean channels. Let me give you guys a couple of other names that are interesting to me. Let me see what we got here. Look at Netflix. I know it's a hard stock to trade. Trades in a dollar spread. Trades by appointment. Guys, look at Netflix. For all you guys who just kind of close your eyes and hope that God's with you, right? Look at Netflix. If Netflix can confirm the 50-day moving average, this thing could rip. Because absolutely rip. Again, it's failed 3 times in the same area. Just watch Netflix for next week. And keep an eye on Apple, right? Keep an eye on Apple as well. Apple had a nice move off the bottom. It stopped at the 10-day moving average. If it reclaims back the 10-day moving average on Monday or Tuesday, okay, we don't know, right? We don't know. This thing could really start waking up as well. So again, we know our key levels. We know we're not anticipating. We know we're not guessing. We are just prepared. Again, for all you guys who've been following along for years and been kind of stuck in this whole retail mindset, buy and hold and buy low and pray. Again, folks, you have 2 choices. You could be a person who buys stocks in the bull market, which is cool, but then you can't complain when the market's going the other way. Again, that's exactly what separates a trader from a holder. Guys, God bless everybody. Have a great, great weekend. And with God's help, I'll see you all on Monday. Take care.